Hello everyone, welcome back to another edition of the Vector Guide. In today's episode, we're going to go over how to use Bollinger Bands, which are technical analysis tools that help us in identifying price trends and gives us an opportunity to better time the market for entries and exits. In order to access this tool, we'll go to the top menu bar under View and select Indicators. So let's go ahead and search for Bollinger Bands. There we have it. So it's been recently searched for, but it's also one of the most popular indicators used on the platform. So let's go ahead and click here. We're going to add it to our existing chart, and we'll click OK. Now let's adjust our screen a bit to get a better view of what's going on here. All right, let's adjust our screen a bit so we can see the Bollinger Bands. So we'll go ahead and zoom out, and we'll recenter our study. That. By hovering over the Bollinger Band until it's highlighted, we can then double click on it to access its properties. Now we can see that the parameters have been set for 2 as a standard deviation of the band, and the moving average is set to 20. And that's actually the standard for the Bollinger Band. So let's go ahead and move over to the Appearance tab, where we can see that we can change the style and the line, we can change the color, and we can also change the thickness. So let's go ahead and increase the thickness. We can also fill in the lines between the bands by clicking Band Painting and selecting our desired color. So let's go ahead and select Fuchsia. We'll click Apply and then OK. So why do we even use standard deviation for Bollinger Bands? Well, the answer is that traditionally, within the financial markets, the standard deviation is used to measure the volatility of returns. There are 3 main lines that form the Bollinger Bands. Firstly, we have the upper band, then the lower band, as well as our green line in the middle, which is our 20-day moving average. To begin, we can see that our Bollinger Bands are sloping upwards, and that they also slope downwards. And for the most part, the price action of our candlesticks respect the directions of these slopes for the most part. Therefore, it's fairly safe to say that the direction of the band is a good trend indicator, i.e., if the band is sloping upwards, it would indicate an uptrend, and if the band is sloping downwards, it would indicate a downtrend. The technical explanation for this is that the bands themselves that we can see here on our chart are programmed for 2 standard deviations, as aforementioned, above and below the moving average. And this is really important because this means that the price action of a crypto will almost certainly fall within this limit of 2 standard deviations. That being said, it's still possible for a candlestick to penetrate the extremities of our Bollinger Bands. So let's take a look at a few examples on our chart where this takes place. For example, here, as well as here, and once again here, and yet another here. The triangles that we formed up top here illustrate several candlesticks penetrating through the upper band, and this implies that the price of the crypto asset will most likely experience a downtrend. In this situation, a trader would wait for the candles to re-enter between the extremity of the upper band as a confirmation to execute a sell trade, as this trend signal would indicate the beginning of a bearish trend, or a bearish market. Our triangle down here illustrates the opposite. We have a few candlesticks penetrating through the lower band, implying that the price of the crypto asset will most likely experience an uptrend. And again, a trader would wait for a candle to re-enter into the extremity of the lower band as confirmation to execute a buy order, as this trend signal would indicate a bullish market. In trading terms, this is known as mean reversion, where candlesticks approach both the lower and upper band and then experience a trend signal change in the direction of the opposite band. So in this first triangle up top here, the candlesticks penetrate through the upper band and we have mean reversion, meaning that we have a trend signal change leading to a bearish market. Basically, when this occurs, traders believe that the crypto asset is overbought. And this triangle down here shows candlesticks penetrating through the lower band and mean reversion occurs in the opposite direction. So the trend signal changes, indicating a bullish market, and traders believe that the crypto asset is undersold. It's clear that mean reversion is critical in identifying entries and exits within the crypto market for day traders. However, mean reversions sometimes take long to occur, even though a few candlesticks have broken through the Bollinger Bands, like here for example, where the market began to lateralize and we experienced a sideways market that lasted for more than 60 candles. In other words, relying solely on Bollinger Bands in order to place trades can be risky. Therefore, Bollinger Bands should never be used as your only reference to place entries and exits in the crypto market. However, they can be used alongside other technical analysis tools to make the most informed trading decisions. Thanks again for watching this video on how to maximize your reading of the charts using Bollinger Bands on the Vector platform. Don't forget to like this video, share it with others, subscribe to our channel, and activate notifications to receive more useful content and trading tips when using the Vector platform. We'll see you soon.